Stocks rally from last week's low and form an inside week. I will explain what I mean. Resistance for stocks is just a little bit higher. Let's see if we can burst through it or if we're gonna roll over here. We'll highlight a trade for Google. Congratulations to subscribers if you have opened it about a while back, but congratulations. Dollar is back above resistance, and this is pressure in gold. Will it roll over? And we'll finish up with WEAT. This is a request from a community. One of the subscribers to YouTube asked for an analysis, so we will do that. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, April 26, 2024. Please don't forget to hit the like button, subscribe to this channel, share this video, ask questions, make comments. This is what keeps this channel going. Again, big thank you for all of the comments and questions I've been getting and the shares. If you're a subscriber, stay tuned. We'll cover a significant amount of stocks and various securities. For example, oil, copper, euro, and British pound will be covered in the members only. Various ETFs, large cap stocks such as IBM and Intel with Meta, funny pattern for Meta, interesting pattern, as well as several of the more speculative stocks such as Baxter, Mattel, and blast from the past, Moderna, if you remember the pandemic. And also we'll finish up with gold related. In today's edition, we will be using, as always, my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart, this green, blue, red, and yellow line. You can find out more about it by going to the link in the description, and you can sign up on my site afterwards. Looking at S&P 500 first, so a few things I want to point out. Let's start with a daily chart, and the daily chart is telling us an interesting story. And again, I find charts generally very interesting, otherwise I wouldn't be talking about them for close to 10 years. So first on this chart, I'm going to zoom in so it's more obvious. Notice this big red candlestick from 4th of April. That completely engulfs the previous day's candlestick from 3rd of April. So that's bearish engulfing pattern. We traded a little bit sideways. Finally, we broke the support where I'm hovering on 12th of April. It's so obvious, right? There's the support and there's the break. We had a kind of waterfall event, continued lower. Already here last Friday, I was very suspicious of this collapse, quote-unquote collapse, because we had 1, 2, 3, 4, 5, 6 red candlesticks in a row, and it's possible, but not very likely that we will have more red candlesticks in a row. So I was already wondering if this was it, and I so far was correct. So on Monday, basically throughout the week, we pretty much moved higher, and we closed near the highs for the week. Notice we're approaching this level marked by the previous support break, so the lows and the close of April 4th, big large red candlestick, form the support resistance line. It's not really my indicator line. You can see the green, blue lines, they're mathematically calculated. This thing is just visually, people, I mean, I drew this line, but is this an actual support resistance? I guess we're about to find out. I trust my lines more. So what happened is we pierced through the green line, and right now we're back above it. So what this is telling me is that at least most likely a challenge of records will be is in the cards. This resistance that's coming up, which is at the lows of this April lows, it's about 5146 area, 5146. We're currently at 5099, so S&P 500 is very close. It's about percent. It's exactly 1% away. So we could see the challenge of this resistance maybe on Monday. And now I wanted to point out this weekly chart. So weekly chart for S&P 500 is interesting in a sense of we have formed what is considered an inside wick. So what is an inside wick? Technically speaking, it's sort of like a triangle consolidation. So triangle consolidations could be a bullish or a bearish, depending on where you are in the, what can I say, in the chart. If you're at the top of the range and we have a triangle consolidation, then most likely we'll break higher and continue higher. What happened here is we pulled back from record highs, formed this very large red candlestick last week, and this week, notice what happened, we have formed a green candlestick which is entirely within the previous red candlestick. So this is called an inside wick, also known as triangle consolidation. We will see if it's very possible that we'll form another inside wick this coming week. This happens quite often, and stock market just loves doing that. And maybe we'll form another one, and it's just going to be like for several weeks we're going to continue, with this triangle consolidation. Alternative scenario, of course, is the break down or break out of this consolidation. So if we close above this level, or if we close below this level, really is going to decide what the next move for stocks would be, and we can sort of estimate. I mean, if we break out of this consolidation to the upside, I'm fairly certain we will re-challenge the record highs that were set just a few weeks ago in March, late March. However, if we break down from this consolidation, this potential 2 week consolidation, possibly we're going to have another one next week, most likely we'll re-challenge this blue line. So we're looking at either move higher or a move lower. Wow, now there's a good way to put it. So most likely, if breakdown, we will re-challenge this, we will retest this blue line, so it's above 4% down, and vice versa. If we break out, we can most likely challenge the high, so about 4% up. So at this point, we're very, what's called finely poised to either go higher or lower. My bias is to the upside, because generally speaking, S&P 500 is in an uptrend. There is really no indication that we have turned around into anything resembling a downtrend. To get to the downtrend, we need to do this. We need to collapse towards the yellow line. So that's 16% from today's levels. At that point, we will consider it a failure and a bear market, but clearly we're not there. So let's not terribly worry about it for now. I wanted to highlight a trade for Google. So Google, also known as Alphabet, ticker symbol GOOGL. Just visually speaking, can you see what I did here? Without me even saying anything really, you can just kind of see what happened, right? We need to look at the lines, all right? The stock was trading below this blue support resistance line in April of 2023. This was a year ago. This is a weekly chart. So each candlestick is a week's worth of activity. This is exactly about a year ago. I sent an alert out on April 28th, 2023. I can show it to you on daily charts, and there it is. April 2023, April 28, 2023. Technically speaking, you are not stopped out because our stop is at the blue line. So if you bought it back here, you did nothing. You just sat in a position. you did not get stopped out here in October of last year because you came close, but we didn't get stopped out. Same thing here, we didn't get stopped out in March of last year, and now we gapped to new all-time records. Okay, I believe these are all-time records. Yes, they are indeed. So I mean, beautiful looking chart, and basically you don't really need to do much. All you need to do is to have these lines on your chart, and if you have the lines on your chart, you need to do as little as possible. The less we do in the stock market, the better. And so we buy and I mean, buy and hold really gets a bad rap, but this is basically the tenet, tenet of buying and hold is we do as little as possible. We buy on breakout, we buy on a pullback, and we sit in a position until there is a reason to exit, but there was no reason to exit. And so hopefully you stayed in this position. 57% gain, big congratulations. And if you did get in the position on my alert, make a comment or at least like this part of the video. Let's move on to Forex universe. Let's look at dollar currency index. This is DXY. This is a daily chart. Each candlestick is a day's worth of activity. So notice what happened. I want to go back a little bit. First, we had an alert back here in October of 2023 with dollar supposedly breaking into a new uptrend. However, unfortunately, it completely unraveled and we had a whipsaw. So this was technically a whipsaw, in other words, a false signal. We went down towards the red line, and actually alert was sent here back in December, and you got your little bit of movement in your favor, and you were able to at least get to the target and break even if you were stopped out. Notice exactly what happened. Notice what happened exactly here back in December 27th and 28th. The dollar index bottomed exactly at the yellow line. For me, this is a big deal because this means that the bears, when the alert was sent here back in December 18, 2023, the bears really didn't have a follow-through. It just kind of stopped and then rebounded. So, and then we have a breakout, even technically even earlier here in February, but then mid-February for sure we had a breakout. Another big pullback, but again what happened, notice we bottomed out at the red line this time. We touched it, we didn't get through it, and we rallied. So now we have for sure several new alerts up to the upside, and finally we have a nice follow through, so you definitely get your target here. So stronger dollar, what does it mean for gold? Gold is traded in dollars. XAU divided by USD. US dollar getting bigger, it should pull this currency pair lower. Dollar is getting stronger. Gold should be getting weaker, but it's not. It's getting stronger. Okay, this is because occasionally we have weird correlations. I can show you what a correlation to between gold and dollar. So right now we have gold on weekly charts, and this is on the bottom here, the yellow part is the correlation to the dollar. And if we zoom out far enough, we can see that very much, most of the times, we can see that we have a negative correlation. Okay, this is going back to 1968. All right, so vast majority of the time correlation is negative. When dollar goes up, gold goes down. When gold goes up, dollar goes down. But on occasion we have a foray into a positive territory. In other words, the gold and dollar are doing sort of the same thing. Okay, notice that up here in a positive territory. and mostly it's negative. Okay, so right now it's one of those times where we have dollar and gold are sort of doing the same thing. Okay, notice positive correlation between dollar and gold. Unusual, but not unheard of. For now, I trust the dollar more, to tell you the truth. Not that I have anything against gold. We trade gold. I've traded gold many times. I love gold in a sense of it's a good way to trade forex markets. If you decide to ever get into gold for preparation to the doomsday, then buying gold coins, buying gold bricks, in my opinion, is a bad idea. Because if you're going to be surviving, you need to be able to take that gold and somehow convert it into something useful like bread. So how would you take an ounce gold coin and go buy something at the local market when there is nothing, there are things are not available? So you can't really do that because people are not gonna, you're gonna bring an ounce of gold and you want like some bread. You don't want, a boatload of bread. So I think the best thing to do if you're gonna do gold is to get gold chains, because gold chains, you can take a gold chain, you can cut a piece of it off, bring it to the market, they'll melt it for you and give you a local currency that's going to be there after the doomsday. All right, this is a very far out scenario, okay? But once again, if you're gonna be doing gold, I think the best thing to do is to do gold jewelry. Gold chains is probably the most useful thing to have. Gold coins, maybe like very small gold coins. We have like an ounce gold coin, but you can do like, a quarter ounce gold coin. But I still think that the best thing to do is to do chains. Regardless, sidetrack, DXY, dollar currency index, is back above the green line. I think dollar will challenge these highs now. And I have a feeling we're going to see more upside. I mean, look at this. USD JPY just went to, I don't think these are all-time highs, but I mean, these are like multi-decade highs. So in other words, Japanese yen just collapsed. All right. What we are looking at currently is gold. So if my prediction or understanding is correct, and I think dollar will continue higher and gold will eventually revert to normal correlation, in other words, gold and dollar move opposite directions, then stronger dollar will sink gold, or at least make it harder for gold to continue higher. So is this the top? It's possible. We have a bearish engulfing pattern between April 19th and April 20th. 22nd, right there, where 22nd of April candle completely engulfs 19th of April candle. So far, we didn't have a lot of follow through, and we're actually back above the green line. So it's quite possible it will continue slightly higher, and we will need to be watching very carefully if we're going to roll over, because we already have a couple of rejection candles. Here's one that occurred on April 12th, and another one that occurred on April 19th with a bearish engulfing. So there is resistance up here at around like 2400 level. So we're going to be watching that pretty closely, especially if the dollar, like I said, if the dollar continues higher, it will weigh on gold, even though current correlations are a bit muddy. Okay, we have positive correlation. And let's finish up with a request from a subscriber, well, a YouTube watcher. He wanted, or he or she, I don't know, wanted to look at WEAT futures. So WEAT futures. He also wanted to look at USD versus ruble. Now, I will look at it, fine, but here I wrote here, Russian ruble, do not touch even with a pointed stick. All right, and if you watch your Monty Pythons, then look up this sketch by Monty Pythons, defending yourself against banana and pointed stick. So do not touch the Russian ruble, like, at all. Like, if you have rubles, hide them. Under no circumstances. But let's go back to the wheat futures, which is a ticker symbol Z, like zebra, W, like wheat, 1 exclamation point. I think I analyzed this chart already, and probably for the same subscriber, same watcher. So on this chart, we're seeing a clear downtrend that began right there. The downtrend in wheat prices began in July of 2022. This is a Russian invasion of Ukraine run-up in 2022, early 2022. But then notice we saw a collapse in prices. Now we're actually near the multi-year, or if not decade, lows. So what are we looking at? We're using my indicators to simply look at the pattern, and the pattern currently is to the downside, or the prevailing trend. So if you have my indicators and for some reason you have a futures account for wheat, you can also trade it using what's called contract for difference. However, it's not available in the United States. So yes, you can do the same thing. You can also trade it using an ETF, I believe. Yes, there it is. Unfortunately, wheat ETF is not an ideal vehicle, but it doesn't look too bad. So, like, we can see similar, downward, similar pattern. I don't think there was. I mean, if there is options available for this ETF, WEAT, wheat, I don't know how deep they are, because this is not a very popular ETF. So once again, if you have a futures account and you are trading wheat, then here it comes. Basically, so far we're in a downtrend, downward facing arrows, meaning that we would have shorted it. I would have shorted it if I was trading this thing. I wasn't trading it, that's why those arrows are purple. I would have shorted it back in June of 2023, again in July of 2023, again in December of 2023, and these are all multi-year lows. And see what's happening right now. So right now we have another run-up of prices. For wheat, so far we didn't have a signal. So a signal would be a close. Right now we have a setup. So in other words, an overbought security in a downtrend. Security is a downtrending, but it has recovered some and now has become overbought. How do I know it's overbought? It's above the red line. The trigger would be a close below this red line. Now, if you don't have my indicators, that number is 6186. Okay, I'm reading it right off the chart. I don't know what that even means. I think it's still an old-fashioned, like 618 and 16. I don't know. If we close below that level, we can consider selling it short. What do you guys think? What is the reason for wheat prices running up in the last few days? Do you think gold will roll over? Do you think we should trust the dollar? Did you buy a Google a while back? And what do you think about S&P 500? Is there going to be resistance up here? Make a comment. If you're ready to sign up, head over to MasterChartsTrading.com, click on sign up one of the products. As I have mentioned in the past, I have two products and one package. So trading indicators are these lines on the chart. You can trade pretty much anything on most time frames. They're available for tradingview.com. This is a tradingview.com interface. It's free. All I have to do is open a free TradingView account, come back to my site, MasterCharts Trading, sign up on my site, and I will open the door for you on tradingview.com. Newsletters, I send out daily alerts about various securities we trade. For example, this week we have traded all of these various securities, or at least alerts about them were sent out in the previous weeks, and no resolution, or they haven't yet come to target with these various securities. And also on the weekends, I send out a special weekend-only, members-only video that covers all of these various securities. And of course, the best deal is to get both trading indicators and newsletters, and they are now, we have a yearly subscription. So if you buy upfront, it will be 2 months off compared to monthly subscription. So for example, if you're buying both trading indicators and newsletters, after the first 7 days free trial, you will be paying $59.95 per month, or an equivalent of $49.95 per month if you buy the yearly subscription. All right, I thank you very much for watching all the way till the end. Please again, don't forget to hit the like button, subscribe to the channel, share this video, let your friends know about me, about this channel, and make a comment. Thank you for watching, and have another great trading week. Bye-bye.